recognize, last but certainly not least, Ms. Ocasio-Cortez from New York.
Thank you. Thank you, Chairman Sherman, and thank you to all of our witnesses who are joining us today. Your testimony and insight is deeply appreciated. I think, especially as we're discussing capital markets and worker protections during this pandemic, it's an especially important topic as we're starting to see states reopen. So I'd like to thank the committee for including several of my bills that would place restrictions on corporations receiving public funds, protection of workers, and ensuring an equitable recovery. So I'll begin with Ms. Simpson. As an investor, just kind of a basic high-level question. As an investor, when you invest in a riskier venture, would it be fair to say that an investor, investing in that risky venture would be compensated with a higher return of risk because of the risk associated with that financial instrument, correct? Would you say that's a broad, general assessment?
Generally, that is correct.
And now, is that same kind of compensation true for workers, in that are workers that are risking their lives in meatpacking facilities, grocery stores, are their returns high? Are they being paid? What does their compensation look like? Do you see hazard pay, which is supposed to be a form of compensation for risk, a norm in your view?
So low-wage workers, particularly those that work in the industries that you mentioned, and thank you for the question, Congresswoman Ocasio-Cortez, are consistently paid very low wages for these kinds of essential jobs that put meat, poultry, and vegetables on our table. That has not changed during the pandemic.
And so in your assessment, that pay is not the norm?
Hazard pay is not the norm. There have been some corporations which have added some hazard pay and then have, since the economy has started to reopen in various states, have rescinded that.
So really, when we talk about compensation for risk, it's not that all people in our economy are compensated for risk, just that a certain narrow class is compensated for risk of capital, but not necessarily risk of life. Ms. Boussette, can you briefly paint a picture of who these frontline workers are? Is there kind of a makeup in terms of race, age, class, et cetera, who are disproportionately represented in terms of these workers that are risking their lives?
I'm happy to do that. So low-wage workers in general are primarily Black and brown workers, so Black, Hispanics, others of that category. They also are predominantly in occupations that include things like grocery stores. I'm talking about now during the pandemic, cooks, waiters, waitresses that have moved to delivery and takeout options. And they also work in home health and in nursing homes. So these are all the kinds of occupations that tend to be extremely low paid. And on top of the information that I just provided, low-wage workers also tend to not have completed high school diplomas. People who do not complete high school diplomas are at a real disadvantage in any economic circumstance, and in this one in particular, their unemployment remains extremely high, one of the highest levels, even as we start to turn the corner into the recovery.
Mm-hmm. Thank you. And I want to pivot quickly about giving folks and making sure that folks are able to preserve extended unemployment benefits during this pandemic. There's this argument that we should not extend $600 a month in unemployment benefits, but we have seen millions of jobs wiped out during this pandemic. And I want to ask a little bit from anyone on the panel, what is the likelihood that these jobs have been lost for the foreseeable future? And what is the likelihood of all of these jobs suddenly coming back, which I believe would be the argument of not justifying the continuation of pandemic unemployment assistance.
I will take a stab at that really quickly. The 11% unemployment is the worst, other than the 2 months that were the worst before that. This is still the worst labor market. We are still losing millions of jobs a month, even though we are gaining jobs. So what the workers are looking at is the potential for long-term unemployment. If you are a worker in the hardest hit industries, those unemployment rates are actually 34%. So workers in that environment are very. That's why millions of them went instantly back to work when they were given the opportunity. This $600 isn't about, I don't want to work. The $600 is that they face permanent job loss, and permanent job loss is very expensive.
Thank you.
Thank you.